When you hear Neil Kashkari and others say, we're going to do everything we can to bring down inflation, and maybe a recession might happen, but we have to go after inflation, do you believe them?
Well, I think that they are right now a dog chasing the wrong car. If anything, I think that the meeting coming up with OPEC will matter more to inflation than anything that the Fed can do. And it sort of makes me scratch my head a little bit, because if you look at what's driving inflation, it's food, and that is because of the conflict in Ukraine, and it's energy because of the conflict in Ukraine. And interest rates will not matter to either of those things.
Okay, so if they're chasing, quote, the wrong car, what is the right car? What should the Fed be doing?
Well, you know, that is a good question, Brian. I think, you know, if you look at what's happening in the economy, we're theoretically, we could be in a technical recession, but it is more art than science. And if you look at all of the data that's going to go into determining at the NBER whether or not we are in a recession, about half of those data points are actually quite strong. Things like labor, you know, incomes, and then there are other parts that are kind of moving sideways or somewhat weak. And so it's really hard to say if we're in a recession. The credit card data will certainly suggest that people are still spending money, although that is on credit. You know, but the story and the picture is really, really murky.
Isn't that the biggest risk to the economy, what you just mentioned, which is, yes, consumers are spending. LAX, your airport, packed. I was just in O'Hare in Chicago, mobbed, hotels still mobbed. But people are putting it all on credit card debt, revolving debt. Interest rates are going up. People's APRs, annual percentage rates, they're getting notices in the mail or email, whatever, like your rates are going up. Isn't that kind of this insidious, quiet inflation that I'm not sure not enough people are talking about?
You know, you're absolutely right. It's not just that. People's mortgages, anybody who has any kind of a floating rate mortgage right now, it's being reset to a much higher price that could cause some sticker shock. We're certainly seeing rents going up. We're seeing it here in Los Angeles, and we're seeing it around the nation. And that kind of inflation will cause a cutback of spending. And we could talk ourselves into a recession. But again, that will be a creation of interest rate, of sort of trying to normalize interest rates.
Yeah. Do you care if there's a technical definition of recession, Gina? Do we care about that, or whether we just feel it and live it?
No. We don't care. If we feel it and we live it, it will expand to the rest of our portfolio. So you have to be a bit defensive here.
Yeah.